Good day, traders. Richard Jacobs here, and welcome to episode 6 for 2018 on our Underdog Education channel. I hope you guys have had a good trading day. It's about 9:50 p.m. on Tuesday, the 16th of Jan, as I'm recording this. On our side, it's been a pretty tough day as we've gotten whiplashed around by the markets, and I'll share some of that with you as we go through the analysis. But as always, let's kick off with a view on what's happening on the daily chart of the top 40, which is what you see up on your screen at the moment. And as you can see, over the past few days, we've had a good few what I classify as A days, as the markets moved up relatively strongly over this past 3 days of a year, putting in higher highs and higher closes. One of the subscribers to our channel put a question out to me in terms of how we go about defining what is an A, B, and C day and what does it actually mean. So let me share a bit of what we found in terms of doing our analysis and our back testing and how we apply these ABC definitions to our trading. Well, it's quite a simplistic system, and really it's built on the basis that on certain days what you start to see is range expansion as a general rule. And this range expansion, a trend in either direction, is really what we're looking for on an intraday basis to maximize our trading profitability. And what we found in our backtesting was that on certain days, which one could, in a sense, apply a level of, a level of prediction to, you found greater range expansion. On certain days, you found that when there was actually very limited range expansion or no range expansion at all. And again, by applying our ABC definition, which we do on the day before we go into our trading, we found that it doesn't work 100% of the time. Nothing does in trading, and perhaps today is a great example of that. But generally over time and in our testing, what we found is that on what we classified as A days, you find greater range expansion and therefore greater trending opportunities for trend continuation, trend following trading. On B days, we found it fairly standard, and that's why we use B days really as our base for our trading. You sometimes find opportunities and sometimes ranges are a bit tight. They tend to still be deliver positive expectancy in terms of the trading intraday trading systems that we do apply. So we do trade on those days. And then we found C days. C days are quite interesting in that what you find is typically no range expansion, no follow-throughs, etc. in terms of trading opportunities. Now, in their own right, both A, B, C, and C days can have positive expectancy, and over time, you tend to find that when the market enters certain conditions which can last for weeks and months, expectancy varies, but the relationship between A, B, and C days, it does vary, but it tends to stay static in terms of profitability or positive expectancy. So A days tend to be over time more profitable than B days, which tend to be more profitable than C days. In certain market environments, C days have negative expectancy, and at which point we actually don't trade C days, which is what we're experiencing at the moment. But in certain market environments, you'll sometimes find that A, B, and C days all have positive expectancy, so you can trade all of them. But A days still remain above B days, which remain above C days. Hope that sort of clarifies how we approach it and what that means. How do we define it? Very simply, what you find is in the direction of a trend. On an A day, you generally have a higher high, higher close. So, for example, let's look at this example over here. On the 20th of November, you had the market the market opened there, closed there. We had a higher high, higher close. As soon as that happens, we apply, and this is where it becomes, an element of probability and prediction being built in, because there's no guarantee that the next day, the 21st of November, is going to be a similar day. But what we say is, if we have a day where we have a higher high, higher close, or a lower low, lower close, we classify the following day as an A day. And generally, again, on average, or a high percentage of the time, it becomes a high probability trading proposition to then treat the next day as an A day and sort of weight your trades a bit bigger. B days tend to be those days where you're still moving in the direction of the trend, but the market tends not to put in in the case of an uptrend, a higher close. So it may put in a higher high, but not a higher close. For an example of a B day would be here. So on the 9th of Jan, look what happens. The market puts in a higher high, but it doesn't close higher than the previous day's high. So it's not a higher close, but it's a high high. So we classify the following day as a B day. Similarly, if you're coming down, let's find a nice B day over here. There we go. Here's a B day. Trend is down. Market puts in a lower low, but not a lower close. So we classify the following day as a B day. C days are those days where you move in the direction of the trend and the market just doesn't follow through. So in other words, you find the market doesn't, it doesn't put in, even in an uptrend, it doesn't put in a higher high or higher close. A lot of the time, it can be defined as typically as an inside day, where you sort of contained within the previous day or the previous within the range of the previous trading trend. So, for example, give me an example. There we go. On the 5th of Jan, notice how the market is contained within the high and low of the previous day. We're just not going anywhere, so we classify the following day as a C day. So that's how we create these ABC days. And as I said, over time, what we found is that A days tend to have higher expectancy than B days, and B days tend to have higher expectancy than C days. And what we do is we track that over time, and we also track how that changes over time. So you'll find in some days, in some market environments over time, we may start trading small quantities on our C days, but at the moment where we are, C days are underwater, so we simply stand aside and we trade in all values. So we don't trade effectively on C days. So that was a bit of a mouthful. I hope that makes sense to you guys, and to anybody who wanted to know more about these ABC days. Having said that, let's jump into what's happening on the markets at the moment. So what's happening, as I said, the market's been putting in these higher highs, higher closes, pushing to the upside. A days for the last 1, 2, 3 days. Tomorrow would also be classified as an A day because we put in this higher high, higher close. So we expect range expansion. Now, one of the questions which can be asked is, do you then have a particular bias in terms of, you got market expansion in the direction of, in an uptrend, for example, you then, take a bias in terms of long trades? That's quite interesting, because what we found is it doesn't actually matter if you're trading, in our case, or 15-minute charts on an intraday basis. If you have an A day like this, a bullish A day, there isn't a particular bias based on our backtesting in favor of intraday long trades only. It's just a question. It's just a case of you have expansion of range. So we'll go long and we'll go short on A days in equal quantities on an intraday basis, just to try and catch those trends for the most part. I'll speak a bit about what happened today in terms of our trading, but just back on this daily chart. What are we seeing? Markets pulled back up into that 61.8 retracement of this leg of the move here. That's what we've been watching. It's looking quite bullish at the moment. It's not looking so bullish if I look at the out of market trading at the moment. The S&P is taking an absolute hammering, and we'll have a look at that as well. and that's going to put pressure on our market in the overnight. At this stage, we're probably down about some 400 points off the close, which isn't great because we're actually involved in a long trade at the moment, and we'll talk a bit about that as well. So that's not looking great in terms of potential upside. And it may be the catalyst for further downside, because remember what we said is we are in a downtrend over here. The market's retraced back up into previous structure, into that 61.8 retracement level, and maybe we start to see some kind of downside sort of manifesting over here for a continuation move to the downside. Could open a potential trading opportunity on the daily chart, even if you saw a really nice bearish candle printing over here, because what you could try and do is put stops above the swing high and try and ride it back in the direction of this, or down to this previous swing low over here, which is something like, let me just eyeball it, about 2,800 points to the downside. So it could be a very nice potential trade even on a daily basis, if you're trading small enough and not putting too much risk on the table. Other thing that we are seeing over here, which is not great, is we see that the ATR, our 10 period ATR, is actually now pulled back inside of its 50 period moving average. And remember what we said is we really want greater range expansion. We just want this ATR to keep pumping to the upside. We want to get to these, these levels over here, where we had such great and big market swings on an intraday basis, and we could really benefit that from take advantage of that in our intraday trading. But unfortunately, we are pulling back to the downside over here, and it's actually going to be interesting to see what happens tomorrow if we do see some form of, I wouldn't call it capitulation, but some form of bigger or relatively bigger sized retracement on the international market front. The other thing, just looking at the ranges over here, we're looking at high-low ranges of about 420 points, and that's really been typical over the past few days, in terms of what's been happening, or what's been available for us. If you look at an intraday high-low range, you just want to try and capture a percentage of that. And when you're working with really narrow ranges, or really, where they only a few hundred points, it makes it very difficult to actually profitably generate or eke out some points in the market. So looking at the what's been happening on the intraday basis, let me just get the here we go. So this is the 15-minute chart of the top 40. We had all that choppiness over there. We spoke about the resistance level which broke, market moved to the upside, put in higher highs, higher closes. It doesn't actually look too bad if you look at it with that lens on. Just yesterday we pushed to the upside, tried to retest this high where they couldn't do it, pulled back all the way. Got a bit of a range going yesterday into the close. Broke out this morning, and if you just eyeball the line, it looks fairly clean. We put in a higher close, retraced, and now it's continuation, move to the upside. But what I want to draw your attention to is this mess over here, because look at the individual candles. You push to the upside and suddenly you get this massive bearish candle printing over there. You push to the upside, you put in a nice bullish candle, and then immediately followed by a fat thick bearish candle. Then you push to the upside and you pull back. You push to the upside, you can't penetrate. You push to the upside and it looks like it's breaking to the upside, it falls back again. You push to the upside, and at the moment it is falling back again. In fact, if I look at the intraday in the outside of market trading data, we're sitting around about these levels over here. So very messy. Even though the trend seems clear here, if you start drawing in some of these smooth trend continuation lines, it's messy in the sense that you just just as you start going into a trade, it sort of pulls back and for most part, or at least in our case, pretty much stops you out going in the opposite direction. And that's made trading pretty difficult today. Let me just look at what we've done. Yeah, I think we had something like five or six trades. I think we had one or two profitable ones, if that. And on a standard basis, so in other words, just on pure points, standard points, we down 144 points. On a weighted basis, because it's an A day, and remember what happens is we weight our trades bigger on A days, we're down 259 points. So not a great day for us. Not the worst day in the sense of absolute number of points, but certainly a frustrating day. And especially if you're one of the WhatsApp group subscribers, you must have thought we were losing it a bit in terms of our going long, going short, going long, going short, going long, stopping out, going long again, that kind of thing. You have days like that. It happens. All I can say is, we follow our rules because we know our system has positive expectancy, and you've got to go with the flow in terms of those trades, because as soon as you deviate from your trading rules, and maybe that's the lesson or learning to be taken from it, what you want to do is you want to follow your system rules because you have faith in your system, because you've tested it, you've back tested it, you know that it has positive expectancy across multiple market environments over extended periods of time. So it's just about spending time in the market and following your trading rules, because what happens is you're gonna lose small, win small, lose small, and as soon as you stop following your rules, that's when you hit that one that one in every few weeks kind of trade that really eliminates all of those small losses and takes you to the upside. So we'll continue to follow our trading rules and trade through this. We're still in pretty decent condition at the moment. On a standard weighted basis, we're only up 38 points for the year, which doesn't look particularly exciting. But as I said, applying that ABC classification means that we're up a weighted 924 points. So that's pretty decent. Nice differential over there. Just taking into account when to go bigger in terms of your trading and when to go smaller. So that's pretty much what's happening on our front at the moment. Let's have a look at the international markets, see if we can make sense. I spoke about the S&P. Let's have a look at what's happening on that front. Let's just get this thing loading over here. And I obviously loaded the wrong chart. Give me 1 second and I'll pull it up for you. Okay, so there's your 4-hour chart of the S&P, and as you can see, pushing up in a very strong 10, putting in higher highs, higher lows, all the way to the upside. And this is what's happened in the past 4 hours. Just ended over here. Markets bottoms just dropped out over here to a certain extent, dropping all the way down to intraday low of 27.68 on the S&P. What's causing this? Well, one could hazard a guess, but if you you recall, one of the things we highlighted was this 2800 level, which comes in right there, and notice how the market's pretty much pushed up into, hasn't managed to put it in a close above that level. Instead, it's pushed through, couldn't hold the level, and then I expect it's probably to a certain extent a lot of profit taking around about that level, and the market's just pushed to the downside over there. Trend still remains to the upside, so we'll keep an eye on it. We've had a bullish start to this 10 o'clock candle over here, but it's early days. See if the market can slowly start putting in a continuation move to the upside. We'll keep an eye on that. We're going to need that continuation move to the upside to really bolster our own market, and because it's really fallen in the last 4 hours or so as a result of this move on the US markets, and combined with probably what's happening on the Rand dollar. Let's have a look at that. Remember, on the Rand dollar exchange rate, following that substantial strengthening, we said since going back pretty much all of this year, we've been chugging along sideways in this range over here. We put in some strengthening over the past couple of days, and we coming to the bottom end of, we've tapped in at the bottom end of this range, and it's going to be interesting to see the market bounces from here, because we haven't really broken structure in the sense of we put in a lower close over here. So for further rand strength, you know, you pretty much need the market to push down and put in a lower close over here. The other way to look at it is it could be stuck in this range, in which case we're bouncing off the bottom of the end of the range, and you can maybe anticipate some upside towards that 1250 level. So this is an interesting one to have a look at on and monitor, because if we do see some strengthening over here coming off the bottom end of the range with an overbought rand, we certainly could see some upside on our own market. And if we see the break and close over here, we could see further strengthening of the currency, in which case that would also have put some downward pressure on our own local market as well. So certainly the US markets on the overnight, as well as the rand dollar exchange rate, keep a close eye on as you're going into the new trading day, because that's going to have quite a significant impact on local trading. Right, so that's what's happening on the local side. Let's have a look at our international offshore trading challenge. Let's pull up what's been happening since last I reported on it. Here we go. Let me just update some of these numbers here on our open positions. The euro pound sitting at a whole £1. Euro yen is sitting at 782, and USD CAD is still negative at 1.23, so nothing too exciting over there. So what's been happening to date with three open positions. Sorry, that position over there is no longer open. I'll update that later, but we've got three open positions at the moment. 21 trades, 10 winners, 11 losers, so fairly decent. Expected 48% win rate at a reward to risk of 2 to 1. So not bad, certainly positive expectation at this time, but again I reiterate, only 21 trades. That's the equity curve. We made most of our money up to £250 here on this opening few trades, sorry, and then we sort of chugged along sideways, broke to the upside again, seem to be consolidating a bit, and hopefully we can see some kind of a push to the upside in terms of the curve as we move forward. Looking at some of the positions that we've either closed out since we last did an analysis, or have entered, and some of the reasoning behind that. First one was the pound yen. We were involved in a long position, I think, at our last recording. Okay, so yeah, this was our long position. Recall we had one bite of it, got stopped out, second bite got stopped out, third time lucky we pushed to the upside. Market pushed to the upside and then came back, and we actually took profits around about those levels over there, just on that retracement, because we put a bit of a trailing stop in on this. But unfortunate, because it did push up again to the upside, but didn't really tap those targets yet, and now it's sort of consolidating sideways. So not too unhappy, because we had a very small risk over there, and we pretty much locked in about a 1 to more than a 2 to 1, 2.5 to 1 reward to risk on this particular trade. We locked up £96, so still comfortable and happy with our performance in that space. The other one that we were involved in, which stopped at the last, was Euro Japan, and this is going to be interesting because you'll see we actually entered back-to-back trades on this one, or few back-to-back trades in this one. We went short there, and we were looking, we put our stops in above the swing high, and we were looking for the push to the downside, finding that bullish candle. Didn't happen. Market popped to the upside, stopped us out. We got short again on this candle here, which looked relatively bearish. Put our stops in above the swing high. Stops actually came in right there. It looked like we were about to stop out as the market pushed to the upside. Just came up to just inside our stop level, came up to 136.1. Our stop levels was 136.11. So we managed to hold on. It's sort of rolled to the downside over here, and it's slowly, it's in the money, slightly in the money, and it's going to be interesting to see if it can continue and push to the downside. So we hopeful and that we still continue to the downside over here. Going to stick with this trade. Our other two open positions, euro pound is one we've been sitting on since Friday. That's also a short. Yeah, that's the one over there. And we got short of this candle. Market pushed down, didn't follow through, and just chugging along in a continuation mode sideways. It's pretty much at entry, so nothing exciting to report. We'll give it some more time, see how things pan out. You know, if we can push down to these levels over here, you know, even then we can get some kind of a rolling stop going. So we'll keep an eye on that. It's not hurting us at the moment, so that's fine. And then I think the last one was our most recent trade, which we entered last night, I think, USD CAD. This is interesting in the sense that, you know, we took it off this market and coming down, putting in lower lows, lower closes. Then we had the push to the upside, a break and close above the previous swing high. We regarded that as a structure break. We waited for the retracement back down into structure, which market pulled all the way back to that 78.6 retracement level. Put in a decent bullish candle, so we got long. It started out well enough, fell down again. Now it's sort of hovering just around about that entry level. What's interesting about this one is we could be seeing a little double bottom of this leg of the move here forming, in which case, you know, if we can penetrate those levels and push to the upside, we could see it you know, push up nicely. Not gonna try and preempt or do anything. We're just gonna sit on this one as well and see how far we can get. On the radar, so look, it may actually be a trade right now. Nope, not yet. This is the Euro Swiss franc. Had a nice push to the upside. Market put in a higher high, retraced all the way back into its previous structure over here. We're waiting for some kind of a bullish candle to try and get involved. Let's pull back into the 38.2. Let me just make sure. Yeah, let's pull back into the 38.2 of this leg of the move over here. If we get some kind of a bullish candle, we certainly want to try and ride it up for a few points to the upside to this previous swing high over it there. The other one to keep on your radar is oil. Pretty similar. Just get the candle in properly. Market's been putting in a seed. It's always been a nice uptrend. Look at that. Higher highs, higher closes, retracement, back down, continuation move to the upside. Then it retraces back into previous structure, pushes up. Then it retraces. Where does it retrace to? Look left. Previous structure resistance becomes support. Market pushes to the upside. Retraces. Where does it retrace to? Look left. Well, a little bit above left, but previous structure resistance becomes support. Continuation move to the upside. This time it's pulled back into this entire structure zone over here. So if we see some kind of a bullish candle, again, we're going to try and ride that back to the previous swing high. So certainly those two things on our radar at the moment, as well as those two open positions, and we'll report back on how things progress on that front. So guys, that's pretty much it from our side. As I said, it's looking interesting in the sense of we've got some volatility opening up, potentially with what's happening on the international markets and how that flows through to our local market. Hopefully we won't see as choppy trading action tomorrow as we did on an intraday basis. Maybe try and get some flow going, you know, real trends that we can try and get on and take advantage of. We'll see how that plays out. And yeah, that's pretty much it. I wish you all the best in your trading, and I shall chat to you soon. Cheers.